are the cheapest they've been in my life tells me that intelligent investors and speculators need to look at gold. My hope is that saner heads prevail, and each of the parties who are party to this conflict figure out a way to get each other out of the circumstance, and the world returns to some form of normalcy. Remember that this discussion is about more than our portfolios, of course. I think that there will be greater attention paid to security of supply. This reminds me of the discussions that we had in the beginning of the decade of the 70s, where, as an example, Japan was trying to muscle its way into supply chains that had hitherto been dominated by Europe and the United States. This circumstance, which is to say a period of time where society has underinvested in productive capacities around resources in the face of economic growth, and a reorganization of the security of supply forces itself on the world, is something that we've seen before, and we see how it plays out. It's fairly messy. Obviously, if you are Europe, particularly Northern Europe, you're going to rethink certain aspects of your energy policy. As an example, with the Germans relying on solar power where the sun doesn't shine, they're going to have to think through their objections to some other sources of power. And probably the Europeans are going to diversify or choose to diversify their sources of natural gas, particularly, of course, from North Africa. I think in Europe too, and around the world with regards to energy, it's going to change a discussion around uranium that has already been changing. Uranium has returned to favor, of course, because it's a source of baseload power that doesn't generate carbon loadings. But it's also, from a strategic point of view, the best form of power that exists. That's why the Japanese took it up with such earnestness after the Arab oil embargo in the 70s, because a fairly small amount of fuel in one warehouse in Japan could power Japan's electric needs for 5 years. I think people around the world are going to look at the disrupted supply chains with regards to energy and the energy transition, that will take place, and there will be a new prominence given uranium. I think too, Andrew, if I might continue just a little bit, what people don't understand is that over 40 years, the real price of natural resources relative to other economic classes has been declining. So it isn't so much that resources are becoming expensive now, it's just that they're becoming less cheap in a historical context. People need to understand that. It isn't so much that resource prices are going up so much as it is that fiat currencies are going down. Part of the changing political winds that favor uranium has to do with the fact that some elements of what had otherwise been considered to be the environmental community has come to understand that the world is going to consume more electrical power. And it's better in terms of baseload power if that's uranium power than coal power. One of the things we all need to consider, Andrew, but particularly in the resource business, is that this whole concept of sustainability, of ESG, necessarily involves a discussion of moving up the bottom half of mankind in terms of their access to resources, that is the poorest half of humanity. There are elements of the environmental community who came to realize that 1.2 billion people on Earth have no access to electricity at all. And another 2 billion people are experiencing energy poverty. One of our great accomplishments in humankind in the last 30 years has been the incredible upward progress of the poorest of the poor. In order for that to continue, those people want to live like you and I live a very, very energy intensive life. So we're going to need more of all forms of power. We're going to need more nuclear. We're going to need more solar. We're going to need, more wind. Some people will hate me for saying this, but the largest year on record for coal demand was 2021. To the extent that we are going to free the poorest of the poor from material poverty, there is going to have to be increasing supplies of lots and lots and lots of natural resources, including principally those around energy. An extraordinary mistake, I believe.
Yes.
I think that all of the wind is in precious metal sales for reasons I'll describe in a minute. But in addition to the fact that I believe that the gold price and the silver price, at least nominally priced in US dollars, will go not merely higher, but much higher. I also believe that gold producing companies, on the metric that I value them by, which is net present value relative to enterprise value, are historically cheap. So let's look at gold first. My belief, despite the current rise due to geopolitical tensions, traditionally precious metals have gone up in price when savers are concerned about the maintenance of purchasing power in conventionally denominated assets, in particular bonds or savings products. Are those concerns justified? Well, let's look at them. The first concern, I think, would come from quantitative easing, government's word for counterfeiting. It is interesting to note that in excess of 30% of all the US dollars currently in circulation have come into circulation in the last 30 months. They didn't print those to accommodate the liquidity needs of an economy that grew by 30%. They grew them specifically for liquidity, which is to say they counterfeited. They added extra specious currency units. The easiest way to debase the purchasing power of something is to make a whole bunch more of it. And that's what they did with dollars. So quantitative easing makes savers nervous. But debt and deficits, credit quality, make them more nervous. The numbers in the United States at the federal level is that we owe each other at the federal level $30 trillion. But of course, it gets much worse. The net present value of current obligations, the off-balance sheet liabilities, entitlements, exceed, according to the government, $120 trillion. So we propose to pay off $140 trillion liability with a budget that's $3 trillion a year in deficits. Pardon me, I missed 3 zeros there. Obviously, it's important. It's impossible to do. It's going to be rescheduled. That necessarily concerns savers. But the third is even worse: negative real interest rates. That's a guarantee from the government, the first that they're going to keep in my memory, that they make you poorer over time. The arithmetic around the US 10-year Treasury is simple and terrifying. They pay you 2% a year in a currency where the purchasing power is depreciating by 6.5% a year. The US government absolutely, positively guarantees to reduce your purchasing power by 4.5% a year for 10 straight years. Jim Grant calls this return-free risk. If that isn't stark enough, Frederick Hayek called them certificates of guaranteed confiscation. The government is guaranteeing that your traditional forms of savings are going to cost you money. Now, that's important for 2 reasons. The first is that the biggest investors of the world, the pensions, the endowments, the sovereign wealth funds, often have had 40% of their portfolios in debt-related instruments. Over the last 40 years of falling interest rates, the capital stability offered by bonds and the stability of income was an important part of their arsenal. Now, 40% of their portfolio guarantees them that they won't be able to provide for their beneficiaries 10 years from now or 20 years from now. There has to be disintermediation out of these bonds unless somehow government stops quantitative easing, balances their budget, and stops negative real interest rates, something that I don't see happening. It's important, too, that if you assume that this disintermediation has to occur, that some of that money will flow into an asset class that has traditionally been relied on to shield people from inflation, which is to say gold. So the fifth element is that, at least in the US market, precious metals and precious metals related securities comprise about 1/2% of the total savings and investment assets of Americans. The 3-decade mean is 1.5%. So if negative real interest rates and all of those things merely compel savers to increase the market share of gold to its 3-decade mean, it triples demand for precious metals and precious metals related securities in the largest savings and investment market in the world. And that's precisely what I think is going to happen. The fact that all of these things are conspiring to come together in gold's favor, juxtaposed with the fact that the gold stocks relative to the gold price are the cheapest they've been in my life, tells me that intelligent investors and speculators need to look at gold.